Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The benchmark indices Nifty and Bank Nifty ended higher, with Nifty gaining 1% and Bank Nifty gaining 1.5% during the week. The highlight of the week was the surprise RBI Monetary Policy Committee meeting outcome on Friday, which took the Nifty above 25,000 mark. The broader market, both mid-cap and small-cap indices outperformed solidly the benchmark with gains ranging from 3% and 4%. Let us first discuss the RBI MPC meet outcomes in detail, as it gives a lot of optimism on how the economy is shaping up and sets the tone for the markets for coming months. Hence, it is important for you to understand this and which sector it will impact positively. First, larger than expected cut in the interest rates. The Monetary Policy Committee MPC opted to front load a 50 basis point cut in the repo rate, bringing it down to 5.5% from 6%. This move, exceeding market expectation of a 25 bips cut, marks the third consecutive reduction, resulting in a cumulative 100 bips cut since February 2025, making it the steepest rate cut cycle since pandemic. Slowing down inflation allowed the RBI MPC to deliver a larger than expected 50 bips reduction in the key repo rate. This is stellar. This is something which MPC has never done it before. Second, inflation forecast lowered. RBI Governor Sanjay Malhotra signaled comfort on inflation and said core inflation is expected to remain benign. He lowered the inflation outlook for the financial year FY26 to 3.7% from 4% projected earlier, which confirms that the inflation is well under control and it's not to be worried for by the markets going ahead. Third, massive CRR cut. The central bank, in another unexpected move, cut the cash reserve ratio CRR by 100 bips to 3% to provide additional capital to banks and boost lending. This CRR reduction would release 2.5 lakh crore in the banking system. CRR is the proportion of deposits that bank needs to set aside as cash. Fourth, growth outlook maintained. RBI said that the growth forecast for FY25 remains unchanged at 6.5%. All these factors lifted hopes for stronger credit demand and a rebound in domestic economic growth, which drove the markets higher. Sector-wise, rate-sensitive sectors led the rally. The Nifty Realty Index surged 2.8%, Auto gained 1.14%, and the Bank Index added 1.5% as investors cheered the central bank's move. Home loan rates, which previously started around 8.25%, are now expected to begin near 7.5%, reducing EMIs and supporting housing demand. This aggressive monetary easing aims to stimulate the economic growth, reduce borrowing cost, and make home loans more affordable, directly benefiting the real estate sector. The rate reduction move could spark a shift from fixed deposit to the capital markets, which works well for both mutual funds, portfolio management service, and retail equity markets. The reduction in the interest rate will impact returns on fixed deposit, which were attractive during the high rate period. With a decline in FD rates, we expect an increased shift in investors' money to market-linked products. This may result in a renewed investment into the capital market, which would improve liquidity and growth. In summary, the RBI's move signals a shift from inflation control to growth activation, aiming to shield the domestic economy from global headwinds while maintaining long-term financial stability. Let's talk about Nifty on the technical charts. Nifty closed the week near psychological 25,000 mark. On the weekly chart, it formed a bullish candle with a noticeable lower shadow, a classic sign of buying interest at lower levels. Momentum indicators remain supportive with all key moving averages set up, aligning in favor of the bulls. Most notably, the daily RSI. RSI stands for Relative Strength Index, has surged past the 60 mark and continues to rise, further affirming the bullish trend. Going ahead, we believe the index is well poised to reach 25,800 zone. On the downside, 24,600 range is expected to act as a strong support during any corrective phase. Bank Nifty has now broken above the key 56,000 mark after trading in a tight range for over a month. We now expect it to move towards 58,000, making this segment crucial for broader market direction. The volatility index, India VIX, ended on a negative note for the second consecutive week. This week alone, it tumbled by 9%, signaling cooling market nerves and growing risk appetite among participants. This is pretty good, by the way, guys. Historically, a falling VIX combined with price and volume breakout reinforces the sustainability of an uptrend, precisely the kind of technical environment we are witnessing now. Hence, we see all signals to start a fresh bull run with a big leg. From above, we like Hudko and Interage. Just a disclaimer, Hudko we have given a long call in our FNO app, and Interage is our portfolio stock in PMS, which is now over 50% return in last couple months, but we do see further upside. Adding further to all this thing, the 4Q, the fourth quarter FY25 result season ended on a decent note. BSE all cap, excluding financials, have reported year-on-year 7% growth in revenue, 10% growth in EBITDA, and 25% growth in PAT, respectively. And EBITDA margins also improved by 60 bips year-on-year. Concluding, the Indian economy is now entering the era of low inflation, decent growth along with good earning visibility. Tailwinds have become stronger, and investors should capitalize on sectors and companies with high earning momentum and price reasonably. That's all for today. Wishing you a profitable trading week ahead. Thank you.